All right, so let's talk about the economy. We've got some breaking data to bring you.
That's right. Inflation fell by more than expected in March to 0.1% from the previous month and 5% on the year. So let's break down what this all means with NBC News business and data reporter Brian Cheung and Investopedia's editor-in-chief Caleb Silver. Good morning to you both. Big news. So Brian, let's start big picture. Walk us through what these numbers are showing and how they compare to previous months.
Yeah, Zinkley, Ellison, the broad story is that inflationary pressures are still there, but they're alleviating a little bit. So when we take a look at the year-over-year changes in prices, if we look at March, the number came in at 5%. That's how much more things got expensive in March of this year compared to March of last year. And you'll notice that's a slower pace than the 6% that we saw in February of this year compared to February of last year. Again, this shows that prices are still increasing, albeit at a slower pace. Now, where did we see price pressures and where did we see not price pressures? Well, in the food category, some good news with changes essentially not between February and March, prices staying the same for all of those food categories at home and outside of the house. Energy prices continuing to fall, down 3.5% in the month of March. These are monthly comparisons, so this is actually compared to February. And then shelter, the cost of just putting a roof over your head, mortgages and rent staying expensive, but still actually slowing at a pace of 0.6%. That is a little bit lower than the 0.8% that we saw monthly in the month prior. So again, price pressures are still high, but again, to see that headline number coming down is certainly good news.
Okay, so Caleb, inflation pressure is still there, but alleviating a little bit. That's what Brian said. Is that your read on this data as well?
Yeah, it is. But you see the things that we pay for the most, food and shelter, we can't get away from that. Plus utilities, all of those things cost American households a lot of money. So while prices aren't screaming down, they are stabilizing a little bit, which could make the Fed decide to either pause or just maybe do one more rate hike in just 21 days and 5 hours. Not that I'm counting, but this is what we're watching for. How's the Fed going to respond to this? This looks like the interest rate hikes are working just super slowly.
And let's talk about how this is impacting people's wallets. Brian, where are we seeing prices fall the most, and are there any areas where prices are still high or maybe even increasing?
Yeah, well, Caleb was pointing out that the things that we spend the most on, like food and like shelter, are still very expensive. But when you look at some categories like meat and eggs, those prices going down over the month pretty substantially. And we also saw that some of the travel categories, as people get out and get ready for summer travel, car and truck rentals went down, although airline fares remain very expensive. Actually, get this, between February and March, airline fares went up by 4%, so it could be very expensive to book a trip this summer.
Not a great time to travel.
Yeah. Caleb, you mentioned Federal Reserve, 21 days, cool, 5 hours, give or take now. What are you watching for there specifically? And for the average person who isn't tracking this all the time, what should they be watching for out of that meeting?
They should be watching any of the interest rates that are floating in their household budget. So if you have a floating interest rate, a variable interest rate, that's going to start to trickle down a little bit because we may be at the end of those rate hikes. We may have topped out at what we call the Fed's terminal rate. So rates are going to be high. You're still going to be paying a lot, credit card rates, et cetera, but they're going to cool down a little bit as we go into the summer, hopefully.
And Brian, briefly here, I know the Fed is also releasing minutes from last month's meeting later today. What will investors be watching for there?
Yeah, well, we have to recall that in the Fed's last meeting, which happened a few weeks ago, that they raised interest rates by 0.25 percentage point. Now, that was in response to inflation remaining high, but also in the face of concerns in the banking industry after the abrupt collapses of both Silicon Valley Bank and then also Signature Bank. Now, whether or not those minutes show that some policymakers maybe have preferred to not raise interest rates at all or wanted to get more aggressive with interest rates, or rather with inflation still high, will be very interesting to see. But again, a reminder that those minutes cover a meeting that happened weeks ago and don't necessarily tell us anything about what the Fed might be doing in their next meeting in a few weeks.
All right. Well, thank you both for this timely breakdown, Brian and Caleb. Thank you.
Thanks for watching our YouTube channel. Follow today's top stories and breaking news by downloading the NBC News app.